Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Morning.
It's the best kind of a day, right? You come out of a holiday and then you go into a holiday. So, tough to beat this one.
And go into a weekend, right? Not just a holiday. Yeah, so
That's true. Good to have a break, right?
But next week is a big one with the budget, and then you have the US FOMC. So just got to save all your energy up for that.
Nigel has watched Pathan, right? He's going to pepper the Bazaar Morning Call with Pathan dialogues today.
Tell us, how was it? Is it worth the hype?
It was a thriller. You have to go and watch it for the man. Shah Rukh Khan, he comes in there and delivers the goods. You know, it's like, just to relate it to cricket, it's like MS Dhoni coming in there. The team was struggling. He's come in there and played an absolute cracker. You know, just look at the collections, look at the performance. I'll tell you what, that man's really... He's done a splendid job, and you have to watch it for him. It's a thriller.
All right. Okay. That's good to hear. I mean, and the Bollywood also needs it,
Are you
right?
going to watch it then this weekend?
I don't know. I mean, depends on the dialogues which Nigel will deliver over the next two and a half hours.
In the spot.
All right. Well, let's get this rolling. So we've got, markets globally which are looking better. I mean, they're steady. So we were out for 2 days. I mean, so basically you've got 2 days of US market reaction to respond to. It's not huge or anything of that sort. Very, very steady, decent kind of price action. The Nasdaq is up about 1.6% in the last 2 sessions. The S&P is up a little over 1% or so. The dollar has not really moved that much. It's weakish. That's where we want it to be. No real big move in the 10-year. Although, I mean, day on day, one day a bit of a sort of sell-off in the yields. The next day, a rebound. So net over the last 2 days, not very much in that sense. U.S. economic data, especially the one that we got last night, and 3 sets of data points tell us that things are not as bad, right? I mean, all this call of recession and the growth slowdown, etc., in the U.S., at least the data is not telling us. It started, of course, with the GDP numbers. We'll discuss more on the GDP, etc., with our guests later. But the number was the quarterly annualized number was not bad. You had the home data, and the home sales data, which kind of indicates that maybe it's bottoming out. The numbers are starting to bottom out. And you also had jobless claims, which registered a surprising fall. Now, jobs are the number one thing which the Fed watches, and the jobs market, according to this second or third in a row data point, this is weekly data, the jobs market is still pretty tight. And I think it's interesting. The market is starting to respond to data in a very different way as compared to 22. Just go back and think about what was the sort of dynamic at play. Bad data was good for markets, good data was bad for markets. But, I mean, if you observe what is happening in 2023, it's changing a little bit. Good is good back again. I mean, it's not inversely correlated. That's interesting to see, and I think there are implications which we can talk about. But I think the dynamic per se is changing. The market is not selling off when data comes better than expected on fears that Fed will tighten. Maybe the market is getting to that point where they think, well, the Fed perhaps is closer to being done. And I think that is what market pricing of what the Fed will do is indicative of as well. Let's come to the market here, right? The Nifty took a very sharp cut, and people were scratching their heads and trying to figure what was the big dominating one single driver. There wasn't one. It was a bunch of things, but no real one single headline which took the market lower. What Wednesday's sell-off did was it has taken us back to the lower end of the trading range. 17,800 to 18,200 has been the range, and now we left off at closer to the lower end than to the higher end of this particular range. As we start this session, the big support is about 1% away. That is 17,761, which basically was the low which was made on the 12th of January. So, as I said, a little over 1% or so. On the way up, the 20-day comes into focus. That's at about 18,036. And then the high, which was day before yesterday, I mean, that was Tuesday's high of 18,201 is the next level to take out once the 20-day goes out. The Bank Nifty broke the 22nd December swing low on an intraday basis on Wednesday. That number is 41,569. The question is, and then it bounced, right? So the question is, And I'd like to look at this, the price action in this context. Is the Nifty Bank indicating a bit of a double bottom? And I think today's session is crucial. A decent close above the 41,569 level, I think will add bulk to the argument that maybe things are going to get slightly better from here on after what has been a bit of a lackluster sideways and, of course, painful start to 2023 so far. Guys, hi.
Hi, morning. Actually, the adjusted Nifty rate is up more than 100 points now.
Yeah.
So the indication, the SGX Nifty rate that is. So the indication is that the start will be well in the green this morning. Don't lose sight of that. But then again, the Nifty continues to face resistance at that 18,200 mark. So we're going to watch for that level very closely. The 18,200 level on the upside. Remember, the Jan series is behind us, but it's the biggest loss that we've seen since September of 2022. The Nifty was down about 2% odd. And the problem is that large FII selling has resumed. So yesterday as well, that's on Wednesday, the FII sold almost 2,400 crores. Having said that, there is a churn in the market and there are new leaders emerging. Autos have become the new leaders in the market. Very good numbers coming in from Tata Motors, Bajaj Auto, Amara Raja Battery. In fact, Tata Motors reported its first profit in the last 2 years. Bajaj Auto reported record high EBITDA. JLR saw free cash flow positive. So lots of positives in the auto space. Now today I'm watching out for Bajaj Finance. Comes out with numbers. It's gone into its numbers very weak. The stock is down about 20% in the last 3 months. But the earnings are expected to be strong. So in that context, will be very interesting to see how the run-up is to the numbers. And for the market, I mean, we've been talking about the levels ad nauseum. On the downside, it's 17,800. On the upside, it's 18,200. Today, of course, the start will be in the green, but all eyes will be on the US FOMC meet that takes place next Tuesday. Then you have the union budget on Wednesday. And of course, we go into today's trade with some positive cues from the global markets as well. The Dow has been well in the green.
Well, that's right. If you just look at the SGX Nifty, we need to compare it with the Nifty futures. So between both of them, you're actually looking at a 35 to 40 point bump up just to kickstart trade. The Nifty futures ended at around the 17,980 odd, and we're likely to start off at around 18,020. So just keep that in mind. We start off in the green, but my sense is you get a bit of a dip intraday. Observations at the start of the February series, well, the Nifty open interest, it's a little below 1 crore shares odd. So we're going lighter into this big event. That's both. We have a big global as well as a domestic event. Global event will be the Fed and domestic event will be the budget. So little lighter at the start of the series on the Nifty open interest, which is normally what we see. The FIs, they're net short on the index as well. But the evidence that we have of the last few series is when they are net short, it's not such a bad thing. Just take a look at what happened in October itself. You had the FIs that were net short on the index, but they were aggressively net short. And in fact, we had a bit of a relief rally out there. You had a 5.5% gain. Not to say that it can happen again, but the point is that you just require some bit of good news that could, take us higher. Now, even at the start of the February series, the short positioning is at around 62%, long positioning at around 38%. And since, the clients, that's the big HNIs, family offices, etc., have been getting it right, I think we should look at them as well. So the FIs are net short on the index, but the client positioning is net long. So they have 69% of their positioning on the long side. Let's see whether or not the clients get it right yet again. In terms of crucial levels that we're looking at, well, the 100 EMA, the Nifty Bank almost ended at those levels. Remember, it was a 1,000-point cut on expiry day itself. So that's a crucial level, 41,500 odd, very, very important. It holds that for today's trading session to give the bulls a bit of some hope out there. On the technical side for the Nifty, well, the 100 DMA will become a bit of a resistance in the near term. That's around 60-70 points away from where we closed in, on Wednesday's trading session or on expiry day. The recent low, 17,760, well, you're hoping that this level holds out. Otherwise, you could easily see, a sharper slide. The point is, don't be very, very brave. Just try to, get through these next few trading sessions, and then you get a better trend. But it's crucial that the 17,750 odd level holds out, and for the Nifty Bank as well, that 41,500 odd level.
All right, Nigel, so those are levels to watch out for and data as they stand right now. Well, before we start, let me tell you what is lined up here in the first half hour of the show. We get you updates on the markets across the globe. Dan Feynman of Credit Suisse will join us to discuss the global trade setup. Our research team will bring you CNBC-TV18's list of top 10 stocks of the day. And at around 8:30 this morning, we do a fundamental stock check with Prakash Diwan. So that's the lineup here over the next 30.
Okay, so we have a couple of equity views coming through. First one coming in from Chris Wood of Jefferies, who says in continuing meetings with investors this week, Greed and fear finds little pushback on the positive view for Asia and emerging markets, with most discussions focused on the tactical issue of the relative attractions of different markets. He says it is widely acknowledged that India remains at risk tactically because of the need to fund increased positions in China, but there is widespread agreement that India remains the best long-term equity story in the Asia and emerging market context. He says to deal with this conundrum, investors seem to be reducing exposure to high PE Indian consumer discretionary stocks rather than reducing core bank holdings. Finally, he adds investments in SBI in the India long-only portfolio and will be removed and replaced by an investment in SBI Life Insurance with a 6% weighting, while the investment in HDFC Bank will be increased by 1 percentage point by reducing the investment in HDFC Life Insurance by 1 percentage point.
And Gautam Durga of Motilal Oswal expects markets to stay range-bound and take cues from earnings season and the budget in the short term. He says the results so far are in line with expectations. Expect the consumption space, which has reported weakness. He adds that BFSI as well as tech companies have met expectations, while autos have beaten estimates. He also expects fiscal consolidation to continue in the budget and the government to prioritize manufacturing and investment via capex spending. He also expects some handouts or relief to the bottom of the pyramid to propel consumption.
All right, let's get you some money market views as well. On the rupee, Parul Mittal Sinha, Standard Chartered says the dollar INR rebounded sharply from lows of 80.95 seen earlier in the week as higher oil prices and dollar buying by PSU banks capped the downside. She expects the dollar rupee to trade in a range of between 81.25 to 82.25 to the dollar next week with a sell on uptick bias. She also expects the rupee to continue to underperform in 2023 due to the still elevated trade deficit.
All right, and on the bonds, Parul Mittal Sinha says domestic yields continue to trade range-bound ahead of multiple risk events next week. That is the Union Budget and the FOMC on the 1st of February. India's maiden sovereign green bond issuance earlier this week saw strong demand and greenium in the market. She expects the Indian benchmark 10-year yield to continue to trade in a range of 7.25 to 7.40%.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. Well, we're looking at Tata Motors, Dr. Reddy's, Bajaj Auto, Torrent Pharma, Amaro Raja, DLF. They are stocks on the back of positive news flow. But on the flip side, you have Cipla, Tata Elxsi, Patanjali, as well as Dixon Tech. They are stocks that could open up in the red.
All right, Dan Feynman is joining us now. He's co-head of equity strategy, Asia Pacific at Credit Suisse. Dan, great to have you with us here on the program. Thank you very much. The last time we spoke, I remember you were cautious. You were cautious about the outlook for equity markets globally, the US in particular. Has that view changed? Are things looking a little better now? Because we have had a few inflation prints, which is suggesting that that problem may be sort of, closer to the end rather than, the beginning. What's your sense?
We've kept our cautious stance on the U.S. and most global markets. Although we had a good inflation print, we have to recall that we had a couple of good prints over the summer last year, and they turned out to be one-offs. I think that for inflation in the U.S., the real difficulty comes as you get closer to the Fed's target range. It's much easier to bring inflation down from 8% to 4% than from 4% to 2%. And that's where we think that markets will get tripped up later in the year. That's when we'll see that inflation proves stickier on the downside, that the Fed needs to keep rates higher for longer than the markets are anticipating.
Okay, Dan, hi, good morning. We have a big event upon us, which is the Union Budget. I think it's the biggest day in the financial markets, right, in the year. So the expectation this time around from an Indian investor is that the fiscal consolidation will continue, and also the government will prioritize manufacturing and investment via capex spending. From an onlooker's standpoint, is there anything in the budget that you would expect that could perhaps move the needle of the market?
You always get a short-term reaction in India to the budget, but I think from a longer term point of view, anything from 3 months onwards, it isn't a major issue apart from, say, the question of broader fiscal stance of the government. But I don't think that the minutia of the government budget has a lasting impact.
Hi, Dan. Morning. What about that toss-up between India and China? I think you were leaning towards China the last time we chatted because of the valuations. It's done pretty well, actually. The last few months have been very good for the Chinese equity markets, while India, we've taken a bit of a backseat. What's the toss-up between the two now?
China still seems to enjoy the edge, largely on valuations. India obviously has a much better structural growth outlook, and I wouldn't describe India's cyclical positioning as negative. But China is coming out of a very deep trough cyclically, and the valuation differential is still huge. India is still extremely expensive, even by India's own standards, and it is historically, it's been an expensive market. China is still more cheap than it's been historically, and that means that the valuations are still too big to ignore.
Dan, if US will slow down, right? I mean, if there is no, but there's no large, painful slowdown as such. I don't know if you're expecting that. The latter is an outcome. And if China is opening up and it kind of gets into more routine kind of a state and not like locked down and, slower growth as compared to before, but I mean, out there, is it so bad? Is it going to be so bad for global markets, in your opinion? Isn't that a more steady state kind of an environment to operate in?
The story is really about earnings. The US economy will slow significantly. It's not going to fall off a cliff. And more importantly, the street has yet to adjust to the reality of significantly lower earnings for the S&P 500. We think that this year is about earnings. Last year was about rate hikes. This year, it's about earnings cuts.
Okay, all right. It's about earnings cuts. We got that. So finally, you want to give us your preference at Credit Suisse. Where does India feature in the emerging market basket? What would your pecking order look like for the rest of the year?
Roughly in the middle. If you're looking at large markets in Asia, China would be the first place we would be investing in on a 3 to 6 month view. Then India next. We like its structural prospects, but the valuations keep us from being more enthusiastic. For the moment, we would rank at the bottom the export-oriented, tech-dominated markets, Taiwan and Korea, where we think that the going is going to remain rough for at least several months more.
All right, we will leave it at that. Thanks a lot for joining in and giving us your view. That's Credit Suisse. Let's slip into a quick break. Lots of stocks to talk about on the other side. Lots of big issues as well. Stay tuned. We'll be back in a bit.
Welcome back. Hope you've had a good midweek holiday and you're all rested for Friday's trading session. Well, we have told you about the index and we're likely to start off in the green with a gain of close to around 30 points. That's adjusted. Our research team, though, standing by to get into the stock-specific action with CNBC-TV18's top stocks for the day. Well, Sonia, you go first. Tata Motors, how are the numbers?
Well, I'm going with bright green for Tata Motors because this is the first time Tata Motors has reported a profit in the last 2 years. And I think that's a milestone considering that they've been struggling for a while through the course of the pandemic. Now, JLR has achieved a positive free cash flow, and that was the guidance that the company had given out, which they have achieved now, which is a big thumbs up for them. 490 million pounds is the positive free cash flow. If you look at the consolidated numbers, revenues have gone up about 23%, core EBITDA has gone up about 53%, and the company has reported a net profit versus a loss of 1,500 crores, which is a big bump up for them. Now, in JLR as well, very strong numbers coming through, largely because A, their products are doing quite well, and B, the supply side challenges have, receded now. So the production of their fast-moving Range Rover, etc., has sort of improved, and hence they could cater to the demand. The company, though, remains cautiously optimistic on the demand situation despite the global uncertainties, but I'm going with bright green over there.
Okay, all right, bright green on that one. Let's focus on a couple of other names, though. Ekta is joining in to tell us about Dr. Reddy's. Ekta, how are those numbers?
Thanks for that. Well, yes, Dr. Reddy's, was a big beat in terms of what they reported. The revenue was up 27%. Street was anticipating around 11% growth. Margins came in at one of their all-time highs at around 29%. Profit at over 1,200 crores. Street was anticipating around 800 crores plus. US sales $370 million versus $344 million in the previous quarter. India up around 10% odd. All of these parameters stood up well for Dr. Reddy's, but estimates are that Revlimid generic contributed the most at around $120 to $130 million versus estimates of around $30 to $40 million. So that was the big beat. Analysts going forward are worried about what exactly the India business will look like, because a large part of it was contributed because of licensing income as well as acquisitions, and going forward what the US business will look like as well, considering that Revlimid generic has been the big growth driver. Stock wise, valuation wise, remember stock is down around 9% from its 52-week high, so maybe there is some amount of room for upside. The ADR was higher in the past 2 days as well, but there have been a couple of downgrades which have come through, so maybe we could start in the green, but I wouldn't be surprised to see Dr. Reddy's in the red today.
Okay, thanks a lot for that. Well, it has been subdued for the last few months, but Bajaj Auto is the one that could really kick it out of the park this morning. Very good set of numbers. Despite all the global challenges and the export challenges, earnings were better than expected. A record high EBITDA is what Bajaj Auto delivered. The revenues went up in low single digit, but the standout performance really was the EBITDA. A strong margin beat. It was a growth of 390 basis points year on year and up for the second consecutive quarter. Now, the company said that a couple of factors aided the margins this time. It was judicious pricing, better dollar realizations and a richer product mix that aided the numbers. But more importantly, they're looking to work on their gaps quite a bit. So their EV portfolio, in which they have the Chetak currently, they're looking to expand that portfolio aggressively. Chetak has a 4% market share and they've sold about 10,500 units per month so far. 10,500 units in Q3 so far. They are looking to sort of gain their market share in the coming quarters. Lot of upgrades. JP Morgan has upgraded the stock. Jefferies has raised the target price to 4,300 and raised the FY23 EPS as well. So I'm going with bright green there too.
Okay, all right. Let's go back to Ekta. Ekta, tell us about more pharma numbers, Cipla as well as Torrent Pharma.
Well, yes, Cipla, came out during market hours on Friday, so it will be reacting to its conference call takeaways, and there have been delays in some of their key drugs for the US markets. For example, the cancer drug Abrixon generic is now estimated to launch probably in Q4 of FY24. It is delayed due to the facility Goa, which has current US FDA issues. The inhaler Advair generic, their target action date is now April 2023, so there is a delay there as well. And the company is aiming for margins of at around 21 to 23% for FY23. So maybe that should help in terms of possibly cushioning some amount of downside. Incred has downgraded the stock to hold from add. Bernstein has an outperform, but they've said that the company has missed estimates. Torrent in line, revenue was up 18 odd percent, margins 29%, profit 283 odd crores. India, which is their mother market, was up 17%, but this was inclusive of recent acquisitions. US was up around 24%, so that did well too. Largely an in-line set of numbers for Torrent. Cipla, we could see further downside.
All right, thanks a lot, Ekta, for that. Well, Tata Elxsi is the other one that will be reacting to its numbers. Reema's here to give us the latest. Reema, over to you.
Thanks so much for that. So revenue growth is slowing down for Tata Elxsi. This quarter, revenue growth was 3.5% in constant currency on a quarter-on-quarter basis. And the track record will tell you that this is slowing down. A couple of quarters back, its revenue growth was more than 7% on a sequential basis. The reason is the company has said media, telecom and the healthcare business is seeing an impact of delayed decision-making, furloughs and short quarter. By short quarter, they mean fewer working days. So media and telecom is about 40% of their revenues. That was down 2.5%. Healthcare is about 15% of their revenues, and that has declined nearly 2%, which basically means 55% of their business, which is media and healthcare, is under a bit of pressure. The balanced one is the automotive, where we are seeing strong growth. Margins have fallen year on year, but flat on a sequential basis. Morgan believes that cost normalization and ESOP cost will keep margins under check in the future as well. The profit has seen a jump up despite a year-on-year decline in the company's margins on the back of a higher other income. So profits are up 29%. But because growth is slowing down and its valuations are higher than peers, I'm going to go with red for Tata Elxsi. Back to you.
Okay, let's go across to Mangalam now. He's tracking Patanjali this morning. Mangalam, over to you.
Well, so Patanjali Foods, quarter on quarter, there has been an improvement in the overall margins. That's because the palm oil situation has improved and they're off their high cost inventory. However, year on year, there continues to be a bit of a problem because of the decline in prices and the company having to pass on those price cuts to the consumers itself. We've seen a revenue growth of 26%. And, year on year, the EBITDA margins have collapsed by about 170 basis points. Net profit, as a result of which, has grown slower than the revenue at a 15% uptick. If you just take a look at their segments, the oil business has shown a revenue growth of 15%, but the operating performance has declined by about 39%. The mainstay of the company, or the main focus of the company, is the foods business, and they've also added, the Patanjali's food division. This is the second quarter running. So year on year, there's a 3x jump in their revenues and 4x jumps in their profits. However, what may worry the street is the quarter-on-quarter slump in their foods margin, which is likely to be the margin driver of the company. From 25% in the second quarter, the food margins have dropped to around 10%. So management commentary on that will be extremely crucial. Until then, expect the stock to be under a bit of pressure.
Okay, thanks a lot for that. Well, the other stock we're looking at this morning is Amara Raja Batteries. Very good numbers coming through. Revenue growth of 12% for the company. You've had margins which have gone up 310 basis points year on year. The EBITDA, core EBITDA, is up almost about 40-odd%. So I'm going with green over here. And profits have gone up 52%. The important bit is management commentary is very strong. They say that in the automotive sector, they've had very good volumes, both in OEMs and as well as the aftermarket segment. The industrial battery volumes also witnessed strong growth, especially from the telecom segment. Now, apart from that, they're making big strides in the electric vehicle space. They've seen in the lithium-ion battery packs and chargers, which are used for electric vehicles, they've seen considerable volume growth there. And they're moving very quickly in EV-related businesses. They have the Gigafactory and the e-hub development work, which continues. Chargers and packs continue to see very good traction. So this is another EV play. And perhaps, the stock would be in the green post good numbers.
Okay, all right. Well, that one expected to open up in the green. But Sonal is joining us to tell us about DLF as well as Dixon Tech. Morning, Sonal. Dixon was the big worry. I mean, it's a disappointing set of numbers.
Oh, it is. Definitely is. I'll speak about those numbers, but let me start with DLF first, Nigel, because it was a good set. If we talk about their residential bookings, they were up 22% on a YOY and on a sequential basis as well to come at 2,507 crore rupees. For 9 months, they've done bookings of around 6,600 crore rupees. They had earlier targeted 8,000 crore rupees. So looks like they'll be able to surpass that guidance as well. 89% of their bookings came in from new projects and luxury projects as well. Their collections were up 12% on a sequential basis as well. They have been able to reduce their debt by around 120 crore rupees. And rental revenues, that is the DCCDL business, there as well, revenues were up 16% on a YOY basis. But Dixon Tech, of course, the big disappointment that came in, it did not meet expectations at all. Revenues were down 22%. EBITDA, yes, it was up 8%. Margins were at 4.6%. Profits also 13%, but it was lower than what the street was working with. Additionally, the management has cut revenue guidance for FY23 to 12,000 crore rupees to 12,700 crore rupees versus 15,000 crore rupees earlier. So that's a big cut in guidance as well. Expect the stock to be in the red today.
All right, and we will, of course, try and get more details on that. So stay tuned, but very weak numbers coming in from Dixon Tech. In case you missed out on any of these stocks, here's a quick recap. Stocks with positive news flow: there's Tata Motors, Dr. Reddy's, Bajaj Auto, Torrent Pharma, Amara Raja Batteries and DLF. While stocks with negative news flow, there's Cipla, Tata Elxsi, Patanjali Foods and Dixon Technology. But the other big internal we're tracking is what's happening in the world of crude, and Brent crude is now back above $88 a barrel. Manisha Gupta is joining in to give us a quick roundup of all the action there. Manisha, there's the big US FOMC meet next week, so all eyes will be on that. But tell us, how is the commodity market shaping up?
Well, the market's clearly watching out for that meeting. But, yes, industrial commodities have continued to gain up. Crude oil prices are trading firm. China demand pickup is one factor. But apart from that, it is about the U.S. refinery run, which has seen a decline. There has been unplanned outages as well, which continues to weigh on. And while 1st Feb is the Fed meeting, it also is the OPEC and allies meeting on the same date. And then the European Union and G7 are set to broaden the price cap on Russian refined products on 5th of Feb. So the 1st to 5th of Feb is going to be quite important when it comes to the crude oil prices. But a very sharp decline is what we are working with for the U.S. natural gas prices. That one is trading at a 21-month lows, and we have seen a decline of 30% already in this year until now.
All right, Manisha, thanks very much for that. So that's crucial to watch. We'll take a quick commercial break here, but some fundamental stock talk. Saurabh Gupta of Dixon Technologies is the first corporate which will also join us on the show. The reported numbers. Prakash Devan, of course, is our market guest who comes up for market talk. Stay with us. Coming up.
Well, hope you folks are having a good morning so far. It was a holiday yesterday, and guess what? It's a holiday tomorrow. So I'm sure the mood is going to be bright across the board. Prakash Diwan is joining in now to analyze some numbers. Prakash, the cherry on the cake is good numbers from the auto sector across the board, right? I mean, Tata Motors, Bajaj Auto, Amara Raja, TVS Motor, you name it, and the showing has been good. But from an analyst or from an investor, viewpoint, what is the stock to pick now?
Good morning, Sonia. So you missed out on Maruti. So that was probably the flag bearer of this improvement for sure. I think what's very clearly happening is autos are making a comeback. The OEMs are making a comeback for the simple reason we had a fairly volatile year in terms of volumes, thanks to a host of factors, including chip shortage, including demand contraction, including input prices going up. And all of that seems to have digested in this last quarter of sorts. And remember, traditionally and historically, the last quarter is never something which is very promising. But in spite of that, if you've seen margin expansion, some of the new product launches that are in the offing, I mean, the Jimny, for example, the bookings have started off and great response. And the moment the pricing gets announced, you'll probably know how much of it gets converted into sales from the bookings. So, there's lots that's happening. Maruti's also announced its plans to launch those electric vehicles. Finally, it's kind of putting its hat in the ring. So I think all OEMs are getting their act together. This year could probably be an outperformance from the auto sector as a whole. My top picks remain M&M and Maruti for the simple reason both of them have some very strong headwinds ahead of them in terms of new products and improvements in their realizations also from there on. So it's a combination of everything working out finally well, unless there's something in the budget that kind of upsets the whole thing. But I don't think there's much of room for that as well, so people shouldn't worry about that. But if you were to be a bit picky about it, maybe post the budget, autos would probably be the sector to ride on.
All right, Prakash, appreciate that that analysis on the auto space. But request you, Prakash, to just hang on. We're having a management with us, and then we come back to you. So Dixon Technology as well, the numbers were very, very disappointing. The revenue was lower. The margins, they were a little bit better. The problem is that the guidance has been lowered yet again. To understand what's the way ahead and what's the guidance, particularly for FY24, we're joined by Mr. Saurav Gupta, the CFO of the company. Hi, Saurav. Good morning. Well, your shareholders are not having a very good morning, actually, because the guidance has been pulled back from around 15,000 crores to around 14,000 crores. And now, in all likelihood, you're going to be ending the year with around 12,500 crores. So this flip-flop is making things a little bit uneasy for your shareholders. So give us a couple of numbers and give us concrete numbers. At the end of this year, do you think 12,500 crores is doable? And earlier, you all were guiding for a big jump in FY24 towards the vicinity of around 19,000 crores. Is that still on? Go ahead.
Yeah, so Nigel, we stick. So you're absolutely right. I think so. We have gone wrong on the guidance this year. And clearly, the reason for that is the mobile business has been slow. And some of the forecasts given by our anchor customer in mobiles, I think so it has not panned out the way, majorly on account of the exports for that particular anchor customer. So domestic markets, I think so we were able to do the volumes that were committed by the anchor customer, but exports, the market was significantly slowed down. And the export volumes did not materialize. So absolutely right. I think so we'll end this year at somewhere around 12 to 12,500 crores. So clearly we are looking at a 3 to 3,500 crores for Q4. As far as next year is concerned, Nigel, I don't want to give a guidance right now. We are in the middle of a budgeting exercise, and we should be able to conclude that in the next 1 month or so with all our customers across verticals. And once we have those numbers, then I'll be in a better position to share the guidance for next financial year.
Saurabh, good morning. 19,000 to 21,000 crores, right, was the number for FY24. But that was the earlier number that you'd put out.
Yeah, so Prashant, you have to give us some time. I think so by March, I think so I'll be in a better position to share the numbers for next financial year. Clearly, mobile is the largest piece for us, and we are looking for some large customer account acquisitions there. I think so we should be able to put some of them in addition.
Yeah, but most definitely, since the 23 number has been pulled down meaningfully over a period of time, the 24 number will also, in a proportionate basis, come off, right?
My sense, yes. But one has to just give me a couple of months, and I will be able to better share those numbers.
How uncertain is the mobile? I was just looking at data. I think this was a Bloomberg story quoting one of the industry analytics firms which compiles this data globally. The last quarter, Q4, mobile phone shipments have been the lowest on record. The growth has been the lowest on record. So there is a very definite kind of slowing, is there any reason why this should reverse suddenly? Because that is a big tailwind or headwind for you. Go on.
Yeah, absolutely, Prashant. Mobile is the largest piece for us, and you're absolutely right. Q4, the volumes were down by 27% for all the brands, including some of our anchor customers. Overall, the numbers for this financial year or calendar year, the numbers are lower by 6%. And so is the case globally also. Global shipments have also been down by 17-18%. Though lately, we have seen some kind of recovery. So whatever volumes we are speaking to our anchor customers there, clearly the numbers for Q4 will be much better than Q3 as far as mobile fees is concerned. And we should have better visibility over the next couple of months as the budgets of our customers get finalized. Which really would have an impact on our budgets as well for the next financial year.
So a two-part question here, a follow-up. Why are global shipments down so much? I mean, is there some particular reason for it? You said global shipments are down 17-18%, so why is that? And when you say Q4 will be better than Q3 in the mobile segment, on an average, you've done about 900 crores per quarter. Of course, there's a fall that we've seen in the mobile division. But when you say better, can you get to 1,000 crore plus, 1,500? What are you looking at?
So Sonia, to answer your second question first, I think so. The numbers that in Q4 we should be somewhere around 1,200 odd crores. So that should be the run rate for mobiles for Q4. As far as your first question on the slowdown, I think so. It's a combination of a lot of factors: the whole inflation, the crude prices going up, the whole sentiment, the whole Russia-Ukraine thing. So I think so. A lot of factors are there impacting the mobile demand globally, and so is the case in India right now.
Saurabh, the problem is the mobile business. Earlier, you all were guiding for a run rate of around 2,000 crores for FY24. When the last time we chatted, you all were talking about 8 to 8,500 crores you'll end FY24 with. Do you think you still get to the 2,000 crores per quarter guidance?
Yeah, so Nigel, we are looking at that kind of number. So if I have to bifurcate those numbers between my existing business, so this year I'll close at around 4,000 odd crores. And we are looking for 2 large customer account acquisitions. Hopefully, we should start the production by Q2 of next financial year for those large accounts. One of them we'll be able to conclude very soon. And those 2 customer accounts should give me additional 4,000 crores. So broadly, yes, we should double our revenues in next financial year.
Okay, so we have to wait for the clarity on that front then. So that's the crucial trigger, those 2 acquisitions that you're talking about.
That's the key to growth. Yeah.
Okay, all right. I also wanted to ask you about your lighting business. What's going on there? That's a margin accretive business, but in quarter 3 and in the 9 months as well, the revenues are sharply lower, and you're on the top 5, I think, globally as well. What's going on with the lighting business, and does that recover from here on? What kind of a contribution can it give you for FY24?
So lighting, couple of things happened, Nigel. One, of course, the market has been slow, though lately there has been some kind of a recovery in the market, in the demand. Secondly, also the technology and LED bulb side, which contributes almost 70% of our revenues. There has been a change in technology to a DOB-based bulb, from a driver-based bulb, where the unit prices are significantly lower. It's almost lower by 15-16%, so which is reflected in our value. But yeah, a lot of work has been going on, and we are on strong recovery path as far as lighting is concerned. You will see a significant improvement in Q4. As against Q3, and a lot of work has been done on value engineering, on adding new SKUs, new customers, and we are also looking for some export in that category.
Okay, just one question. It was just a month ago that you scaled down your mobile revenue guidance to 4 to 4,500 crores, and now again in a month you're scaling it down further. What has changed in 1 month? I mean, you spoke about how export market is under pressure, but are you seeing a slowdown in urban demand in the local markets as well, in the domestic market?
Yeah, Sonia, I think so. Markets has been slow as far as mobile demand is concerned. So just to highlight that number of which Prashant mentioned, there's a 27% degrowth in mobile in Q4 as against Q4 of last year. So clearly the market has been slow, but yeah, lately I think so there has been a uptick in demand, and our customers have given more volumes for this quarter as against Q3.
Okay. All right, very quickly, Saurav, give us a number. What is the margin outlook for FY24?
So I think so FY23 also we should be somewhere around 4%. So we have done better as far as margins is concerned, as far as balance sheet is concerned. Yeah, revenue has been a slightly downer. My sense is next year on account of more operating leverage, more and more migration to our own design, more backward integration, I think so margins should inch up slightly higher than 4%, but as of now, yeah, somewhere between 4 to 4.1, 4.2% kind of number for next year.
Okay, well, we hope all the, the problems and the caution that you're seeing in the export markets, we hope it subsides, because this is not looking good from a company standpoint, from an investor standpoint. But thanks a lot for giving us more clarity. So that's Dixon Technology saying that global shipments in the mobile industry are down 17-18%. Exports have slowed down quite a bit, and hence they had to scale down their overall earnings estimates as well. Well, let's tell you what's lined up for the next half hour of the show. At around 8:45, Anuj will be joining in for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Before the market opens in CNBC TV18 Stocks Board, we'll highlight the top stocks in the news to focus on for the day. Welcome back to Bazaar Morning Call. Well, the SGX Nifty is indicating a positive start, but there is so much to reckon with this morning. Anuj is here to give us his view. Anuj, this 18,200 mark is so sticky, right? I mean, we've been unable to cross that, and now two large events next week. You think the market is going to struggle around those levels?
I mean, good morning. Yes, but same can be said about 17,800 also, Sonia. It's, something which is holding. I think we have a couple of important issues to deal with. For starters, we'll start positively. But after this disaster expiry that we had, but my sense is that it will get sold into immediately. And we need to see how this Adani issue is going to resolve, how it's going to impact the banks. Because the Wednesday move was also magnified due to expiry. Let's not forget that. And the key trigger is going to be this FPO. If this gets fully subscribed, the Adani FPO, maybe then that leads to some short covering. The other thing is that IT is going to do well today. In fact, I won't be surprised if it really has a big rally today, because again, Nasdaq was up big time. Tesla rallied 11%. So it's corrected on Wednesday in line with the market. But this month, the Nifty IT is up 5% and Bank Nifty is down 3%. So there's a relative divergence of about 8%. And also keep an eye on metals, because China, after a 1 week holiday, will reopen from Monday. And my sense is traders would want to preempt that today and would want to take some positions. On the Nifty, the series is starting with heavy shorts. So that gives me confidence that if somehow 17,800 holds, then there can be some short covering, provided 17,800 holds on closing basis. Closing basis is important. The Bank Nifty, clearly, Wednesday's move proved that the rally that we had, recent rally, was a fake rally. It required 1 day of move to negate 10 days of rally on the Bank Nifty. And ICICI Bank is now within 25 rupees of a 200-day moving average. There's something wrong with the banks. HDFC Bank, I think, will decide the near-term move. But my sense is no trade on Bank Nifty till budget is out of the way. But Nifty, if it holds the lows in the second half today, could actually give you a nice short covering as well. That's my base case.
Okay, all right, Anuj, thanks a lot for that. Well, Sudarshan Sukhani as well as Shrikant Chauhan, both of them join us this morning to give us a quick technical check. Good morning, gentlemen. Well, Sudarshan, how would you trade the index? We'll actually start off mildly in the green, but there is still some weakness. We're not out of the woods. Your sense?
Yeah, good morning, Najan. See, on Wednesday, there was a small trading range which took 5 days to develop. And my point was, if it breaks 18,030, we are looking at a breakdown. That breakdown happened, and it took just 1 hour for the Nifty to go down 200 points. So my really point is that markets go into trading ranges and take days to develop that range. And sometimes it takes only hours to fulfill the targets of that range. Once that is done, the market again goes into a huddle, which is exactly what should happen today. We have completed a decline. The chances are we will go into a choppy environment once again. Markets will go up and go down, but the lows that we made on Wednesday are likely to hold. So chances are, if we can spend the first 2-3 hours in a choppy environment, there would be an opportunity to buy a dip, not a breakout, buy a dip, and then see what happens for the rest of the day. So that's the trade for today. Wait for the choppiness and then buy a dip. That's for the Nifty. The Bank Nifty is a complete avoid. It was a disaster. It will take many days to recover from that.
It's okay. The Bank Nifty is a complete avoid. Shrikant Chauhan is also with us. Shrikant, hi, good morning. Interesting times, right? I mean, you had the IT sector that's come back into action. Autos are back in a big way. What are you doing on the index now, and on individual stocks, what are you looking at?
Yeah, good morning, Shunya. Good morning, everyone. I think, see, the way the market is like forming its trading range, and now the selling is intensifying. Whenever the market is opening or starts trading somewhere close to 18,150, we see a good amount of selling pressure in the market. And this time, the Bank Nifty is creating some more pressure in the market. So this time we need to see that whether the market manages to sustain above the mark of 17,750 or not, because above this level, the market has spent almost a month. So in case if we see the market is dropping below 17,750, then certainly we are going to see further more weakness. But as the markets are like oversold in terms of option statistics, the put call ratio of the current series is around 0.60, which clearly indicates that we may see some activity or some reversal in the near term. So we are of the view that, as Mr. Sudarshan had said, that the market should go up from current levels. We are of the view that it should recover from current levels. With the stop loss of 17,750, we should be buyer in the market if there is any correction in the first part of the market. And on the higher side, again, 18,050, 18,100 is going to act as resistance. For the Bank Nifty, 41,500 is the level. Below that, we can expect 41,000 in the short term.
And individual stocks?
For the stock specific, again, we need to focus on few metal companies before the announcement of the budget. We like Hindalco, which is around 489, 490. There we are expecting stock to move towards the levels of 500, 510. We can keep stop loss at 490. And the other stock which we like is from the IT basket. Infosys is the stock to buy for. 1540, 1545 was the closing. We are expecting stock to move towards 1600 in the near term. We can keep stop loss around 1520.
Okay, all right, got that, Shrikant. Sudarshan, what about you, individual stocks?
Well, TCS is a buy. Now it's a buy for the day also, but Sonia and Nigel, you know, the real wealth is created if you hold on to these blue chips. It's a perfect buying opportunity if you want to hold it for months and weeks and months and years. Current levels are very attractive. But for the short-term trader, buy TCS with a stop under 3,400. IRCTC actually was in a trading range and broke down yesterday from that range. So many other stocks did it, but it doesn't have a very good chart. It's an intraday short. Short selling should be done only intraday. Intraday short with a stop above 644. Marico is an outperformer. Finally, after a big decline, it's moving in a trading range and actually had a good day on Wednesday. That's a buy with a stop under 495. And ONGC, which is in a persistent uptrend, just like TCS, is a buying opportunity. Again, while you can go intraday, really these wealth creators need to be held for a longer period of time. Buy ONGC with a stop under 150.
Okay, thanks a lot for that. Let's do one thing. Let's take a quick commercial break, but auto stocks will be in focus. So we will get Kotak Securities to talk about Q3 earnings in the auto sector in just a bit.